In today's video, I'm going to be discussing why your mortgage payment is going up and, unfortunately, will likely continue going up. I have all the details and answers to your questions right here in the video. Let's get into it and discuss what's going on. All right, now first off, if you have a 30-year, a 20-year, or a 15-year fixed-rate mortgage, you may have been seeing lately your payments are now going up. But why? I thought it was a fixed-rate mortgage and that my payment would never, ever change. That's not totally true. So when your loan officer told you that your payment will never change in the history of your loan, again, false. That's not totally true. We're actually talking about a couple different things here because there's 4 different elements that make up the payment of your fixed-rate mortgage. When your loan officer told you the payment will never go up, they're generally referring to P&I, in other words, principal and interest. When it comes down to these two, then yes, these generally do not change when it comes down to a fixed rate mortgage. The only thing that changes about them is that how much money goes to principal and how much money goes to interest with each individual payment. However, the other 2 aspects of a general payment, PITI, principal, interest, taxes, and insurance, the other 2, T and I, actually do change, and this is exactly why you're seeing your mortgage payment go up. But let me explain really quickly and what we can expect here over the coming years as well, because things have changed a lot. And if you have a mortgage, you're certainly going to see this, especially if it's a fixed rate. But if you have an adjustable rate mortgage, oh yeah, you're going to see a lot of changes with your mortgage going forward. But in this video, I'm generally only talking about fixed rate mortgages because, again, a lot of people are wondering, this is weird. I'm very confused. It's supposed to be fixed, and I just saw my payment go up substantially. In fact, I just got done reading some information as I was doing more research on this. I saw a story where somebody said their mortgage payment doubled because of this. That's a bad situation, okay? And they had a fixed rate mortgage as well, okay? So they said this, that their payments doubled as a result of this. But anyway, let me explain a couple different situations here as far as what's going on and why this is likely going to continue, okay? So, yes, when it comes down to principal and interest, those 2 just don't change, okay? When a fixed rate mortgage comes in, you're right, those do not change. However, the other 2 are the culprits. Taxes and insurance, okay? Let me break down both of these one by one here, okay? What have we seen over the last, call it, I don't know, 3 to 4 years? We've been seeing rapidly rising prices in real estate. In other words, price evaluations, assessments of these real properties are going up. In other words, a $200,000 house, call it, I don't know, 4 years ago, is probably worth $250, $270, $280, maybe $300 today, depending on location. It has gone up a lot. Probably anywhere between 20 to 50% in some cases, okay? That is not unheard of based on where the property is located around the country, okay? Now, what is also going up as a result of valuations? Yes, property taxes, okay? So it depends on your location. And again, depends on your state, your county, your city, all kinds of things like this. But across the entire country, generally, your county is going to come in and assess your property. Probably every year, maybe every 2 years, maybe every 3 years. Again, it's going to depend on where you're located. But generally, in a relatively short amount of time, the county assessor is going to come on knock-in and looking at your property, and they're going to assess the new value of your property. Well, guess what? If you bought that home, say 5 years ago for $200 grand and now it's worth $300,000, guess what? Your valuation has gone up. Guess what the old assessor wants? They want their fair share. Yeah, have you heard that lately? Exactly, right? So they want a cut of this too, okay? Because now the property value has gone up. Therefore, they believe, hey, property taxes now need to go up accordingly as well, okay? So when we see these rapidly rising prices in real estate, or basically anything, then we continue to see, hey, somebody else wants a cut of this too. They're going to come out with their little sticky paws sticking out, and they want a cut of your money, okay? So as valuations go up, this is what's doing this. So what happens is that when valuations and prices go up substantially very fast in any calendar year, from one assessment to the next, the assessor now says, hey, your property's worth another 20 grand this year. We're going to stick that on your valuation and we're going to raise your property taxes by $200, $300, $400 this year, or some specified percentage point, okay? Now remember, this needs to go back into your payment. In other words, if you're somebody who has PITI in your mortgage payments, in other words, principal, interest, taxes, and insurance, these come out of the general most mortgage payments because most people have principal and interest, taxes and insurance escrowed, okay? Most people have an escrow attached to their mortgage. In other words, your bank basically charges you more each and every month. They have a little account set aside, and they pay your property taxes for you. They pay your insurance for you, and they do all of that for you so that you don't need to do it. Then they assure that their asset, in other words, what they have they've lent money on, making sure that those liabilities are paid. In other words, insurance and taxes are paid on your behalf. They do this through the escrow, right? So anyway, as taxes go up, now your lender needs to come back to you and say, hey, sorry, the old assessor, your good old county raised your property taxes. Now we need to request more money from you to put into escrow to make sure that these liabilities, these taxes are paid on your behalf. So they jack up your payment by $20, $30, $50, $100 a month to get more of this money from you to make sure that these liabilities are covered. Does that make sense? So this is exactly why. It has nothing to do with principal and interest on a fixed rate mortgage. It has to do with taxes, okay? Property taxes, good old property taxes going up, and this is where they need more money. But guess what? It's not just property taxes. It's insurance providers as well, which is my next point that I want to share with you as well. Have you looked at insurance premiums over the last, call it, I don't know, 2-3 years or so, especially the last 1 to 2 years? They've gone up massively, okay? Look at your auto insurance. Look at your homeowners insurance. Look at your renter's insurance. Look at any insurance that you're holding right now. It has gone up massively. Why? A lot of claims across the entire country. Well, guess what happens when there's massive claims across the country? The insurance providers go back to all the people and say, sorry, we just paid out $5 billion to this natural disaster, some major thing that happened somewhere, and now they raise premiums on everybody. So everybody has to pay basically the insurance on that. Their premiums go up, and now they're kind of held, they're holding the bag at the end of the day, right? So insurance premiums have gone up a ton lately. So if you're a homeowner or an auto owner, anything like this, even if you insurance on anything, you've seen this go up. But in this video, we're talking about real estate, okay? So anyway, if you are a homeowner, you've seen your homeowner's insurance premiums go up a lot over the last couple of years. I'm guessing you probably have. Well, guess what? Same situation here as with property taxes, okay? The insurance company comes back and says, hey, your premium has gone up by 10, 15, 20, 25, 30%, whatever it happens to be. Well, now your lender, gets the bill for the insurance and says, hey, homeowner, I'm sorry, but we need to raise your payment now to account for how much the insurance has gone up. So yet again, they raise your mortgage payment because they now need to put more money into escrow because of property taxes that have gone up because of higher valuations, and they need to put more money into escrow to cover the insurance liability for the insurance premium payment for that year as well, okay? So this is exactly why mortgage payments are going up on a fixed rate mortgage when your loan officer told you, don't worry everybody, you're going to be totally fine. Your payment will stay the exact same for 30 years. Sorry, loan officer, that's not totally true, right? And again, here's the thing. They're not trying to pull anything on you. They know better, okay? They're telling you, we're all talking a couple different stories here. The loan officer is talking about principal and interest. I'm talking about the whole picture, PITI, principal, interest, taxes, and insurance. I'm talking about all of it because you got to look at the big picture here, okay? Yes, principal and interest is great. And yes, those are adjusting accordingly every single payment. But when it comes down to the big picture here, I want to know, out of pocket, every single month, what do you have to pay, okay? That's the whole picture, unless for some reason you are not escrowed. In other words, you do not have an escrow account set up. Well, if that's the case, then you're right. Your fixed rate mortgage will never change. It's just principal and interest. You're fine. You're good to go. Your payment will never, ever change. But guess what? that bill that you get in the mail from your insurance provider and your county to get your taxes, those have gone up, right? So that is what I'm talking about here. But most people are escrowed, okay? Not everybody, but most people do have an escrow just because honestly, it's way easier to have your bank, your lender pay all of that for you, okay? This is exactly why payments are going up, and a lot of people don't recognize this, but this is exactly why, okay? I've had some people reach out to me and ask, hey, what's going on here, okay? Now, another thing too, I want to point this out really fast. Some people have also wondered, hey, my landlord is jacking up my rent. Why? Same situation. Same situation for the landlord as well, okay? They are getting higher valuations on property taxes. Insurance premiums are going way up. And they're getting all those bills as well. But guess what? They're passing that on to the renter, okay? They're passing that on to the tenant, okay? Same situation here. Make sense? Anyway, I hope this helps you. If you want me to come back and clarify on this further, I can certainly do that for you. Otherwise, leave your comments, your questions, your feedback down below. Subscribe down below if you haven't done so. I really do appreciate your support. Thank you. Just want to do what I can to help you out. I know financially it's rough out there. I totally get it. We're all living this together. We're all, going through this together. I'm certainly no exception to the rule, okay? Anyway, hope this helps you. But again, please subscribe down below. Share this video. For anybody that you may think may benefit from this information, there's a big share button down below. Go ahead and share this with them. Thank you. Really do appreciate it. Otherwise, enjoy your day. Take care. Have a good one. And I'll catch you again later in another video.